Welcome back to the channel for another one. In this video, I'll be breaking down how much you need to make in order to afford a 2023 Acura Integra. I think you should really consider following one of these rules in order to avoid making a huge mistake that'll end up setting you back for years down the road. I've also got a link down in the description for a free auto quote where you could save up to $600 a year. There are 4 options I'll be going over today, and you can decide on which one suits you the best depending on how into cars you are. Some people just want a reliable form of transportation, and some are willing to sacrifice quite a lot more in order to get the car that they really want. Stick around to the end of the video, find out which method would be best for your personal situation. This is 4-Wheel Finance, a channel dedicated to helping you make smart car buying decisions. Before I dive into this first rule, these videos take quite a lot of time and effort to make, so please give it a like, subscribe, comment down below what other vehicles you would like me to review. The first rule is the 24-10 rule, and this states that you must put at least 20% down on the vehicle, you shouldn't finance it for more than 4 years or 48 months, and the payment can't be more than 10% of your monthly gross income. Since the 2023 Acura Integra has an MSRP of $31,895, in this case, you would need to put down $6,379. And with the average new vehicle interest rate of 3.86% and a 48-month term, this would bring your monthly payment to $574.53. Take note here that you're also paying about $2,000 in interest. Bank Rate states that the average monthly insurance cost is $148 a month, but this varies quite a lot from person to person, your gender, your age, the demographic where you live in the country. So give a look at that Smart Financial link in the description below to find out exactly how much it would cost for you. They shop around with some of the nation's top competitors and find you the best price. This would bring your monthly total to $722.53. Now, back to that 24-10 rule, given your monthly cost would be $722.53, you would need a monthly gross income of $7,225.30, or an annual gross income of $86,703.60. I encourage you to take a look at the opportunity cost here. If you were to buy a $5,000 or $10,000 car and put what would be your car payment of $574.53 in the market instead, over the course of 5 years with a relatively conservative 6% rate of return, that would turn into $40,115.99, gaining over $5,500 in interest alone. Again, take a look at those investing apps down below there. I've got Acorns and M1 Finance. Acorns, you can invest your change. M1 Finance, you get up to 2 free stocks. Grab yours in that description below. And this is just for the first 5 years. If you were to continue on for 10, it would amount to $93,800.23, again at that 6% rate of return, which is pretty conservative. Stock market averages around 10 a year. This next rule is my own, and I made this up for more of the car and truck people. You need to have at least a 6-month emergency fund, invest 15% of your monthly gross income into your 401k or 403b, and max out your Roth IRA and ideally your HSA too, but I'll leave that one as optional. I know, this does seem like quite a lot of saving, but I don't give you a monthly percentage rule that you have to stick to beyond that. It's up to you to decide how much of your free budget per month you'd want to spend on a vehicle, if you'd want to spend more of that on wheels and tires and roof racks and lift kits, or if you'd rather go on more vacations or go out to eat more. It gives you that. I give you that option. I make sure that your bases are covered in terms of investing and saving in case anything crazy happens. You can break an arm or a leg or have a sickness come over you, or anything can happen. Your water heater could go out, your roof could cave in. So it's smart to save some money to make sure you're secure, especially later in life when you'll need it the most. There's a lot of people out there that say that, well, nothing's guaranteed, and that's definitely true. Tomorrow's not guaranteed, but it's very difficult putting a price on having peace of mind for your family or yourself. So I highly, highly encourage you, take a look at those investing apps, get started today. Next rule is the Dave Ramsey rule. He's pretty popular and unpopular to a lot of people, so you probably heard of him before. You must have a 3 to 6 month emergency fund built up. The vehicle can't be more than 50% of your annual gross income, and you need to purchase it all in cash. Given that the 2023 Acura Integra starts at $31,895, your annual gross income would need to be a minimum of $63,790. There's a lot of pros and cons to buying a vehicle in cash. Ideally, it's nice because you don't have to pay that $2,000 in interest and your insurance would be a tad bit lower, but there's a big con of not everybody's got 32 grand in cash they can put towards a car. The final rule is the 1/10 rule, which is developed by Financial Samurai. Pretty popular, you may have heard of it before. Personally, I think if you're trying to build your wealth as quickly as you can, you should pay attention to this rule. It doesn't really allow you to buy a new car, but it's set up to help you spend responsibly, which reduces your car ownership stress and your financial stress, which increases your net worth over time. It's very straightforward. It says you can't spend more than 10% of your annual gross income on a vehicle. So it's probably going to be used, and it could even be a clunker. And you need to own it for at least 5 years, but ideally more. Again, the theory here is to minimize your financial stress, free up some money to invest in assets or opportunities that may come your way, things that go up in value. It's much more stressful and difficult making car buying decisions and life decisions when you're worried about those payments each and every month. Once again, this is 4 Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, leave them down in the comments below.